US markets were closed overnight for Independence Day, but European shares were once again lower for the fifth day in a row. Singaporean company Wilmar has announced that they will buy Australian sugar company CSR for 1.75 billion Australian dollars. Wilmar is the world's largest palm oil trader, and they do have a strong foothold in the thriving Chinese market for the oil. They have decided to use their existing sales channels to deliver sugar, which is also in strong demand in China. Once again, this does indicate the strong demand for food in China, and this is of course also very positive for us here in New Zealand. The New Zealand dollar has traded in a fairly narrow range overnight and once again is trading around 68.80 against the US on Tuesday morning. The UK government has asked its ministers to cut spending by between 25 and 40% over the next 4 years. This is an attempt to try and limit their budget deficits, which are currently running at 11% of GDP. This has really seen limited demand for the pound over the past 2 years, and this is where we are currently seeing it sit. The New Zealand dollar is likely to increase against the pound up to about 50p at one point before falling. However, it is likely to sit in the mid 40p range over the medium term. While spending cuts and increased taxes will be good for the UK economy over the longer term, there is going to be short-term pain, and this will limit demand for the pound. The possibility of the Great British pound sitting in the mid 40p range against the New Zealand dollar over the next few years does pose some difficult trading conditions for New Zealand sheep farmers. The UK market is very important to us, with about 45% of our premium lamb legs heading to that part of the world. One advantage of a weak pound does mean that UK farmers will be able to export more product through to Europe, leaving a little bit of an opportunity for New Zealand lamb to sit on UK supermarket shelves. However, UK consumers and prices are probably at the top of their current ranges, and for this reason we see little opportunity for significant price increases for sheep farmers back here in New Zealand over the next few years.